Okay guys, just want to go over one of the trades we took on Friday. So first of all, I'll show you the market action. This is the algos from Friday. The red line being put buy in, green line being call buy in, and obviously the white line being the SPY, which is all represented up here. Around about 10 o'clock, that's where the put buy in started to increase. The call buy in was basically flat, but it did start decreasing as the day went on. Market was getting more bearish as the day went on. So round about this 9:55, 10 a.m. area was where we started getting confirmation that the market was getting weaker. So the play we had in the room, I'll show you first on TrendSpider. So this was the play we took. All this is in the channel, guys, of the trades I take. So it was a break of the 303.50 with a target of 301. I was in the 302 calls just because it was Friday. I took Friday's expiry and just want them to get in the money on the day. So these calls went over 100%. So it was a nice clean setup. After it broke our 303.50, we already know, based on the market, that the market was weak. It was just getting gradually weaker all day. It was slower than I'd like, but they still worked. So even if you're taking this on the hourly time frame, you could have waited until although this candle broke, you could have waited until this candle opened, retested, which you did, and then started coming down and breaking the low of this candle before you entered the trade. But whatever you got it in the trade, it wouldn't have been far off my entry price, which is all posted in the channel. Okay, so that was the idea behind the trade. This is my broker chart. So what I was looking at on this, it's obviously the same setup as what I just showed you on TrendSpider, but I've seen this double top on the hourly. You can see where the volume is increasing at the open on this first 60-minute candle. So when it broke this eye, we had a double top. You could see where the volume started to spike, and this wick at the top of the candle where the sellers started pushing it back down. So it was just a matter of seeing which direction the market was going, being patient, waiting, and then waiting for the clean trade and the clean setup. So as soon as this broke this area here, we wanted to fill back down to the pivot, which went a bit lower. That's why I got in the 302 strikes, but that was expected and anticipated because, like I said in the channel and in the room, our target was 301. So these contracts went over 100%. In this market, like we've spoke about in the room all week, be patient, wait for the clean setups to come. They will come. Go along with market direction. Don't go fighting the trend. Just make sure your exposure is not too much that's going to stop out of these trades. And then obviously play the setup on a time frame that the setup is on, because like I said, it could be out of that trade quicker. The trade could happen before, but when we get in these setups based on a time frame, you want to make sure and expect that it could take that time frame to work out. So you don't want to be getting pushed out on any small pops if the setup is still relevant on these other time frames, all providing it's within your risk. So the point of this video, guys, is just to show you, wait for these setups, wait for it to be going along with the market direction, and then take the setup, be patient, let it work out. And like I said, this trade was over 100% on these contracts. So it's just a matter of being patient, guys, and then hitting these setups when they come, because they will materialize through the day. You just got to be a bit more patient when a day is choppy or when it's a bit slower, but they will come. So don't go rushing anything going into next week. Let the setups come, let the market confirm the direction, and obviously when that happens, then we'll take a positions. Okay, guys? Hope this helps.